Yesterday, Tesla stock dropped 15.4%. This was the 7th worst day in Tesla stock history. As haters target Elon Musk and Tesla, Elon has responded, saying the stock will be fine long term. Today, we'll hear from Dan Ives of Wedbush Securities, who says we've been here many times before with Tesla, and his thesis and bullish view remains unchanged. He says we're at the start of the biggest innovation and tech cycle in Tesla's history, ahead of the next few years. Morgan Stanley's Adam Jonas thinks the 50% pullback in Tesla stock is a buying opportunity for an embodied AI compounder. Adam says Tesla stock could hit $200 before potentially hitting $800 per share within the next 12 months. Cathie Wood of ARK Invest just presented at a summit, and she's expecting a deflationary boom in the second half of this year. We got Hans Nelson joining us. Hans, it looks like that you've got a lot of hatred for Tesla and Elon Musk that's impacting the stock and the business. But you've got these institutional analysts who are still very, very optimistic about the future. Quick thoughts on that before we review what's happened to the stock?
Yeah, I mean, definitely quick thoughts would just be the Warren Buffett quote, "Be greedy when others are fearful." And that's the sentiment that these analysts are portraying. And the deal is that really the stock price of Tesla in 2026 is going to be 90%, 95%, 99% dictated by earnings and earnings growth of Tesla, the company. Yep. And especially into the rest of the decade, that's going to be even more and more true. And so if you are a long-term holder and you have a thesis that's completely centered around, can Tesla deliver on their ability to earn revenue from software on the vehicles and on the Optimus robots as that S-curve also starts to take off, then these short-term fluctuations, whether they're 5%, 10%, 15%, 25%, as long as you're not in margin and you have positioned yourself structurally to be able to withstand these downturns, these seasons of volatility, then this does actually look a lot more attractive as an entry point. But that's going to be hard because a lot of people who are long-term investors, they're not positioned in cash right now to where they can take advantage of these prices to try and either average down or, just buy lower than it's going to be in the future. And so that really psychologically is difficult because you look at it, you can't purchase it at these prices. And so then it feels like it's down for no reason. And that's very difficult. But it is that psychological pain that is the thing that washes out most people. And, the desire to sell in a moment like this is the thing that gets most people. And so I really love Morgan Housel's book, The Psychology of Money. And, there are definitely some differences that I would have in investing style with Morgan. But just understanding the psychology of yourself attached to your money in the market in a moment like this really does separate the wheat from the chaff. And I am very excited about the long-term potential here. I've been very interested personally, not financial advice, in buying Tesla Leaps ever since we got below 270, but it just hadn't felt like we were really there at that bottom. And at these prices, it's looking really, really attractive to me to try and liberate some cash. That's one of the other challenges is I've got to figure out where to liberate the cash from in order to make a purchase like that. But man, this looks like a generational buying opportunity from my perspective.
Yeah, thank you for that. Yeah, certainly lots of people in different scenarios. I've been hearing so much from folks who are suffering, who are pretty upset about this. So let's put this in perspective. Let's take a look at what's actually happened. So yesterday on Monday, we had the 7th largest single day drop in Tesla history. These are the list of all the single day drops. And what we saw on Monday was here, March 10th, 15.4% to 222. But there's been others that are worse, 21%, 19%, 18%, so forth. So it has happened before. This is kind of something to expect with not just Tesla, by the way, but a lot of the large caps. Elon responded to James' post there saying, it will be fine long term. So again, like you're saying, yeah, it's worrisome to see what happens in the short term. But the question is, what is long term? People, so many people are upset about that. Søren Basher always does a great job putting things in perspective with his charts. The worst 100 days for Tesla, here it is. Every one of these blue lines is one of the worst 100 days. And you can see here that this yesterday and Monday was the seventh worst day. So it's not the worst, but it's certainly one of the worst. Top. Here's a better look at this chart here. James Stevenson also put in perspective that July 6, 2010 was also the all-time low closing price for Tesla stock. The Tuesday following the 4th of July holiday weekend after Tesla IPO'd. That's the all-time low. Though the dates above are the only 8 times Tesla stock has fallen by more than 15%, Tesla's risen in value by more than 15 times. So it's almost like an equal amount of times that it's fallen as much as it's risen this much too. So this is just, again,
well, not just equal, more, almost twice as much. There's only 8 days down and almost 16 days up. So almost double the number of days that match or exceed that level of going up. Then
that's actually a really important point. I'm sorry I missed that. Thanks for pointing that out, because Søren has been pointing out that, right, there's a reason why the stock has skyrocketed, and it's not because of number of days of it going up and down. It's that when it does go up, it goes up much higher than when it does go down. So even though,
and it goes up more often than it goes down. So both, both
just a little bit more though. That's the problem. It wasn't like significantly more going up. So how long will it take to recover? I thought this was great. So here's Søren reminding us again, the same chart we saw here. But if you're like you just said at the beginning, if you're acquiring shares, it's not terrible. You just purchase them 15% off, right? But a lot of people are very upset about this. So what you need to look at is how long will it take to recover today's loss? Can't answer that question. But the recovery time for the other 6 largest daily drops, it only took this one 5 days, 9 days, 18 days, 10 days, 7 days, 5 days. So for the other 6, again, you can't just by looking at the past performance, not indicative of future, but for these top 6 drops that fell, it only took a couple weeks. What's your thoughts on all that?
It's Peter Lynch always said that volatility is the price of overperformance. And what he means by that is that if you want to own one of the companies that's going to be that 10 bagger or more over time, that in his experience, almost every single one of those companies came with extreme volatility, that there's a lot of fighting back and forth on what is this company worth in the market when you have something that really doesn't conform to the standard company in the S&P 500 is something that grows slowly and it delivers incremental gains to its shareholders, but it's nothing special. It's certainly not ever going to be a 10 bagger. And so for the few companies that are going to just dramatically defy those odds and those expectations, there is a lot more fighting in the market over what they are worth, which in real terms for investors, that means volatility, that it's going to go up really sharp, really fast, and it's going to come down really sharp, really fast. And the swing between how high it gets and how low it gets, as over time it outperforms, gets to be very, it can feel very violent, up and down and up and down and up and down. And that is something that you have to be able to stomach if you want to hold the type of company that delivers you a 10x over 10 years. That means you have to hold it every day for 10 years. And you, in doing that, become accustomed to, today it's down 15%, but I've also had lots of days where it was up 20% or 25%. And you just kind of get accustomed to the feeling of, it's going up and down and up and down and up and down. And I haven't sold at any point along the way, and I'm not going to start now. So that's how I think about this. That's how I internalize it. That's how I manage the emotions in a situation like this.
Yeah, that's good advice. I really like it. It's a good reminder for us to keep that in mind. So there's been, of course, some institutional analysts who have downgraded. They follow stock down. Today we're going to look at the three bulls, though, right? Dan Ives, Adam Jonas, surprisingly, he's normally kind of not so bullish. Then you've got Cathie Wood, what she's thinking. So here's Dan Ives of Wedbush, one of the top bulls for Tesla. He said this just an hour ago. He said, a pivotal moment for Musk and Tesla. Autonomous, FSD, new cheaper EV models, all coming on the horizon to drive demand. But this Musk Doge political firestorm needs to be contained for the Tesla brand. Investors need to see Musk lead Tesla at this key moment. The time has come. He's calling for Elon to step up and show that he's really fully committed to Tesla and to speak out at this point. He released this note as well. Been here many times with Tesla. Our thesis and bullish view unchanged. The brutal sell-off will go down in history books for Tesla investors and a painful day for the bulls, including us. There's a protest at the dealers, the violent scene in Europe and in our US, more Musk-related brand worries, distractions, but he thinks it's going to be he's still sticking to his guns with the outperform 550 price target in 12 months. If every time we threw in the white towel in the Tesla name when it got hot in the kitchen, we would have missed one of the most transformational growth stories in history. Such a great, good note here. So some things he just said are, this is the start of the biggest innovation and technology cycle in Tesla's history ahead of the next few years. And as these things happen, the launch of unsupervised FSD in Austin this June, that we value at $1 trillion alone on the sum of the parts valuation. Autonomous is where you focus. Thoughts on what Dan just said?
Yeah, I mean, the thing that I think a lot of people are forgetting is that there are Teslas today that are driving themselves from the end of the line in Austin to their outbound shipping lots. And, many people will look at that and they'll discount it and say, well, that's not that impressive. They're not actually operating a robotaxi fleet at scale. Waymo's ahead, blah, blah, blah. But the fact of the matter is that there's not a single other auto company on the planet who is doing what Tesla is doing right now in Giga Austin. And this is on, a piece of functionality that's built on top of an exponential technology trend that if they can do that today, tomorrow it gets better. And the day after that, it gets better. And the day after that, it gets better again. And what will start out as just a few cars driving themselves from the end of the manufacturing line to an outbound delivering lot on the premise of the Giga Texas factory will almost inevitably be a first national and then eventually global international robotaxi ride hailing service. And we are at the point where this technology is approaching takeoff. And this is the last point in all of history that I would want to not own Tesla. This is the most exciting from a fundamentals standpoint time to be a Tesla investor since the company's inception. There has not been a more exciting time from foundational technical standpoint. And if you think about things through that lens, that's where this really does look like an extremely exciting generational buying opportunity that either the software will work or it won't. If it does, then what we're talking about is orders of magnitude greater profitability than what we see today. And they have this is the point with the least amount of risk in the story that the software is actually going to work that we have ever been in throughout the entire course of the company's history. So the risk is at the lowest. The potential upside is at almost its highest that it's ever been. And the mismatch between expectations and that reality is just huge. And that mismatch, that arbitrage is the opportunity.
Oh man, you're on fire today. Thank you so much. I think many of us need to hear what you're saying. Like you said, the cars are coming out. Like just yesterday, Asha Kalaswamy said there's thousands of cars coming out of the factory now that are self-parking itself. And it's going about a mile to get to the parking lot. And then very soon, right, they'll be making cybercabs And guess what will happen to these cybercaps? They get built, they launch out of the factory, and they just keep going. They don't go to park. They get ready to be part of the robotaxi in Austin. This is going to be crazy when you start seeing that, and we're that close. So the question, though, is, that there is damage to the brand, and there are sales that is being cut back. We don't know how much, right? Because it could be that some people are saying, well, Republicans are buying more. We don't know exactly how big of this is. This is what Dan Ives is saying. So first, he says exactly what you just said. Autonomous will be the biggest transformation to the auto industry in modern day history. In our view, Tesla will own the autonomous market in the US globally. Okay. And then, and he said this, right? We believe Autonomous and Optimus will represent 90% of the valuation of the Tesla story, creates a company with a valuation that exceeds $2 trillion. But then he thinks that the Doge, Trump, Musk situation right now and the brand worries, they estimate less than 5% of Tesla sales globally are at risk for these issues, despite the global draconian narrative. Do you agree with that? That it's really just a small 5%? I mean, significant, but it's not, overall.
I would say that's directionally correct, but coming from my bias as someone who leans much more libertarian and really supports the core concept of Doge, that we need to dramatically improve the efficiency and effectiveness of governments globally, the United States government included. But right now, that is something that has been out of favor for many, many years. We've built up a very, very bureaucratic and sclerotic governmental system that needs to be pruned. And this is something that, if you've got experience with, almost anything in real life, in order to, whether you want to be healthier, you have to change some eating habits, whether you want to build muscle and you're going to have to spend some time in the gym, whether you want a good relationship and it's going to take a lot of work to lay that foundation. These types of things require short-term sacrifices in order to enjoy long-term benefits. And the debt that we have here in the United States at the national level is already very, at a point of near crisis and potentially catastrophic if we allow our current spending habits to continue. So I would agree with Elon on those fronts that we have to do something. Now, will the things that we are doing right now be effective at curtailing the looming crisis that we face? I don't know. And I know, and to Dan's point, this is going to be deeply unpopular with many, 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 many people, because they don't see, they don't understand, or maybe they are looking at different issues as being more important, but just disagree that our fiscal situation is as dire as some of the rest of us believe that it is. And so I know that that's the price of entry to actually work on this problem. And I know that most people don't agree that this is a problem that needs to be worked on. And for them, it will cause, brand damage. But in the context of the company as a whole, I would say that 5 years from now, Doge is going to be a footnote in Tesla's history. And the real question will come back to, did they execute on delivering robotaxi as a service? And did they execute on delivering Optimus robots? In the meantime, was the brand hit 1%, 5%, 10%, 25%? It's really hard to handicap that specific amount. But for those with that, 5 to 10 year time horizon view, it's guaranteed to be a footnote on the overall story anyways. And so I would say that's how I view it.
Yeah, that's where I'm sitting as well. I think that the brand damage is going to cause car sales to fall. But we don't know how much, but let's say it does. It's still comparatively to the autonomy story and the bot story going to be just, a footnote, like you said, just a tiny little portion, maybe not even significant anymore. So,
And it is hard to say how many people are buying now that wouldn't have bought before compared to how many people are not buying. And it may be that balances out on a wash in the short term. Maybe you're right. Maybe it is more of a hit. There's more negative than there is positive. But I would just say that it is possible. I don't know how likely it is, but it is very possible that this is going to be something that's more like a Barbara Streisand effect, where
Yeah,
the
could be.
negative coverage actually produces more positive
Mhm.
response than negative, and that this could be actually a tailwind to Tesla sales over the course of the year overall.
Mhm.
I'm not saying that I'm predicting that's 100% likely, but I'm just saying that that is possible. And so
Well,
I don't want to be overly
hmm.
deterministic on what the outcome is here in
So,
the short
so
term.
far, most people are attributing the stock fall to this relationship with Doge as and a political storm rather than,
I
just
guess
we know
I
that many stocks have fallen. We know that
yeah.
they're not the only ones, and there's crypto that's fallen. There's lots of things that are affecting it, but the pullback is so much more outsized, more than even the beta. So
Yeah.
okay,
Yeah, so
let's
I would agree there. There's some incremental loss on the short term stock price. Obviously, the S&P 500 is down, especially the Mag 7 is down a lot. And so if you looked at the beta just compared to the Mag 7, yes, it's a little bit more. But the other thing is that I think the global auto market is something that usually takes a harder hit in these times of
yeah, that's right.
trade war issues.
Yep, that's right.
And so even, if
Yep.
you looked at it, the beta of auto versus Mag 7, and,
Hmm.
and you kind of have to then layer both of those things in. Okay, so it's taking a hit from being the Mag 7, then it's also an auto company. Um, it's just a tough time right now for the stock price specifically. And I think that is potentially going to continue for, like, I don't see what the big news events are that's going to change that narrative in the near future. But it's always hard to know what those things are going to be in advance. So, maybe we'll get them tomorrow. Maybe it'll be a month, 2 months, 3 months, 4 months, 5 months from now. But I definitely, like, once you get to June, then it's like a matter of time, assuming that we actually do launch robo taxis, and we've seen Ashok deliver on
So far. Mhm.
FSD timelines pretty well over the past year. And so, if you even give them an extra 3 months and say, okay, we launch robo taxis in September, then you should start seeing financial impacts in early 2026 that are impossible to ignore. And so that's kind of like, at
Yep,
worst case scenario, I think in June of 2026 that the narrative has been decisively won by financials.
I agree with you. Okay, well, here's surprisingly is Morgan Stanley. Adam Jonas thinks the 50% pullback in Tesla is a buying opportunity as Tesla heads towards embodied AI compounder. Having covered Tesla for nearly 15 years, he says, we find that the investor narrative around the company tends to follow the share price. Adam thinks Tesla could hit $200 before potentially hitting $800 per share within the next 12 months. It's their top pick in the US auto. So they're very, very bullish, surprisingly. This is Adam Jonas. He released this note saying that narrative, basically saying the same thing we just said here. And then Cathie Wood saying that the market today is discounting the last leg of a rolling recession, which will give the Trump admin and the Powell Fed many more degrees of freedom than investors expect, setting up the US economy for a deflationary boom in the second half of this year. She's actually very bullish of what she sees happening in the second half of this year. Yes, it's pretty down right now, but this is setting it up. It's going to be the last legs of this recession, and then we're going to go to the US economy for a deflationary boom. And she just presented this chart at the summit, and she's believing that disruptive innovation will drive nearly 38% of the market by 2030, while those that resist change will shrink under the weight of technology deflation. So you want to be starting to think about the disruptive tech that's out there. This is it. This is the year that's going to start coming. This is the chart here. The non-disruptive is the gray, and the Mag 6 are the light blue, turquoise. I don't know what color that is. And then you got the purple is the disruptive innovation. So this is together with the Mag 6 and disruptive innovation, that's going to just basically take over. So you'll want to be here for the next 6 years.
I certainly hope that Cathie is right. I do have more worries, I think, than she does about the trade situation that we're in. I don't know that I would agree that the second half of this year things are already going to
Mm.
start to get so rosy and so much better. And I also think that disruptive innovation is a lot harder to execute on. than she gives it credit for. And so while I would agree with the direction of the trends that she cites, I don't know that I would necessarily agree with her timelines. And as an investor, I try to position myself such that if these things do take a lot longer to play out than
Mhm.
expected, that I'm okay. And that, in fact, not only am I okay, but that I'm still in great shape and on track to meet my goals. So I would say I always love to hear Cathie's analysis. Uh, she's got great perspectives on a lot of things, but there are just definitely areas where you really want to mix that with a giant grain of salt. So,
Well, that's fair. And then Dan Ives actually had a second note talking about a little bit more about the future. Here's him saying that many times with Tesla, Apple, Google, Nvidia, Amazon, Palantir, and others, our backs were against the wall and at times appeared dark at that moment, yet those were the opportunities. Our bullish tech calls have been upside down in 2025. It's painful, but not the end of tech bull market. So what to do in this massive tech sell-off? It says focus on Apple, Tesla, Palantir, Nvidia, and Microsoft. We've seen it all from the dot-com bubble, the burst of the financial crisis, to European debt crisis, to COVID lows, and everything in between. After the historical bull market led by the AI revolution of the past 2 years, we're now seeing some major investor worries as the Trump tariff news, perceived recession fears, the tech growth concerns. But you know what? This is not the end of the tech bull market. We're just about there. This is year 3 of what will be an 8 to 10 year build out of the AI revolution. Will there be some near term headwinds from Trump policy? Yes. But this is in no way changes the $2 trillion of AI capex on the horizon. We also believe valuation wise, many of these tech stocks are not expensive. We're in the early stages of a fourth industrial revolution, and it's being driven by a handful of big tech players: enterprise AI, consumer AI, LLM models, autonomous, robotics, and many derivatives. I agree with that. So yeah, their bullish calls have been upside down. They're wrong. They were wrong this year, beginning of this year, but they still pretty bullish about what's going to happen for these stocks. So our top picks to own in this brutal sell-offs: number 1, Nvidia; 2, Apple; 3, Tesla. I don't agree with Apple, but I agree with the whole thing about the tech stocks. I think anything that is in AI. I'm just not sure Apple is in AI. Yeah. Final thoughts on what he said?
yeah, I especially your comment there about Apple, they are in a tough spot with the recent announcement that they're delaying the release of improved Siri. They're going to have to do a whole rewrite on the operating system. Um, man, like I hope that they can execute on that at a much higher level than they've been able to execute on a lot of their big initiatives recently. We've seen a lot of failure on things at this scale over the last 10 years from Apple. We have no Apple Car. We have Apple Vision Pro was basically a flop. Like if it's not an extension of an existing product or the AirPods, there's not a whole lot of, rosy things to point to where they have been able to successfully execute bringing new products to market at the quality that and price points that Apple customers are really interested in adopting. So, yeah, that makes it tough. They do have all of the pieces in place though. That's just the classic innovators dilemma dynamic that they have going on there. You would think with their Apple Silicon, you would think with their expertise in software in general, their ability to integrate things across the ecosystem. Obviously, they have all the cash that they need to make the investments to build the technology. It's just really comes down to having the management culture that is able to drive execution on these specific types of products. And in order to do that, you have to be willing to endure some pain. And I just don't see that type of leadership from Tim Cook or Apple management. And that's where I get really nervous for them. And so, I personally would not be investing in Apple. But to your point, the rest of those names look a lot more interesting. Palantir's at insane valuation still now, but they are in a great position to continue to grow and grow strongly. And so those valuations may be justified 12 months from now, that, we've seen a lot of growth from them. And just the overall point that we are still in a tech boom. AI is going to be delivering productivity gains that justify lots and lots of earnings growth. And while that's true on the macro level, then picking the micro winners, that's where things get really, really difficult. And to build on the management execution piece, that's why Tesla is far and away my biggest pick in this list of names, because they have shown the highest level of ability to execute on these innovative new products. Like an EV is a very technically difficult, innovative, real world product to bring to market. And they have done that and continue to do that at the best level. There's no one else that creates a superior product from a software and hardware standpoint to Tesla in EVs. And they have done that by being exceptional at delivering continuously improving software, and their innovation in real world AI is globally recognized as some of the best. Tesla's entry into China with FSD has been blowing away expectations. If that this is another one of those things, Tesla's never going to be able to operate FSD in China because of all the challenges of the driving environment being so hard, and the Chinese government not letting them export data, and the United States not allowing them to bring chips into China, and all these different things. And they have shown, actually, we can execute there. We can deliver on version 13. We can continue to ship updates that are improving this functionality over time. And they are bringing the highest level of innovation execution to the table. And then they're also working on the products and services that have the largest potential TAMs of any of those players. Optimus as a project is a way bigger opportunity than Microsoft, Palantir, Apple, or NVIDIA are going to. Well, NVIDIA is the other arguable one there. And NVIDIA is also the other one that has incredible execution. So, of those five, I would definitely put NVIDIA as the top. And I'm a Palantir investor, and I don't actually own any NVIDIA stock because I just was kind of behind on understanding their story until more recently. But if I was putting new money into the market today, I would definitely be putting it into NVIDIA ahead of Palantir, and just because of valuations. And but then obviously, especially Tesla, the foremost, because it's the opportunities, the execution, and then you layer in how much the stock has come down. It's the biggest no-brainer in terms of value for money.
Thank you so much today. It was great perspectives. Stock has fallen significantly, yet at the same time, as you said, just focus. FSD in China is doing really well. They're still on track for the June release. These are massive opportunities. They're changing the world, and yet people are focused on,
window dressing things that are not the most important things. Like, just remember, how much better has FSD gotten for anyone who owns a Tesla? Yeah. How much better has FSD gotten in the last 18 months? And how much faster is the progress that we're experiencing right now than it has been in any other point in the history of FSD? That is the what is the rate of progress of FSD? Yeah. And they have been delivering above expectations improvements on software in FSD for the last 18 months. And my bet is that continues. And if it's that continues,
weird, isn't it? Yeah. For March of the year, we've got the low cost vehicles that everybody's been begging for, about to be launched in a month or two. We've got autonomy, which everybody's been begging for, we can launch in a month or two. So just a few more months from now. We got robots being built in the thousands. This is the year, but yet it's just really weird. But okay, I mean, it is what it is, and we'll have to just as investors, weather the storm at this point. Thank you very much, Hans. Follow him on his X channel at Hans C. Nelson. Check him out on his YouTube channel. And if you can, he just had an accident with his car as he was heading to SpaceX event. And if you're going to buy a new Tesla, click on his referral link, and you can save up to $1,000. Thank you, everybody. Bye-bye. I've created a website that is the most comprehensive resource for the Tesla investor. Please check it out. Simply go to my website at herbertong.com.